Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola and Malaysian palm oil. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. Prices during late April and May pushed up through some pretty significant congestion dating from September 2012 between 513 3/4 to 519 1/2. Despite the outside weak pattern made 2 weeks ago, a pattern that is the lesser cousin to the key reversal. Despite this pattern, the market tried to move even higher, but ran into a roadblock at the March 23 high at 540 3/4 and dropped off until last week when we had a small gap filling recovery, but this time halted by another roadblock, or should I say a couple of roadblocks. The first and possibly the more significant is the bright red neckline extension above, currently at 526 1/4 of the April to August 2024 head and shoulders top. A neckline that throughout mid-stroke late May to early June the market tried making into a base of action. The second, and to a lesser degree, is the July 23 high at 526 1/2, a congestion I also pointed out 3 weeks ago. This leaves me with two final points to discuss. First is that we have some congestion now just above the market from the rising green short medium moving average, currently 520 1/4, along with other congestion from September 2012 between 513 3/4 to 519 1/2, already mentioned that. I said last week how I was somewhat dubious about this congestion. I still am. Not so the second and final point, and that is what I warned about last week. We have a monthly key reversal down for June here, with all the implications that may have. And what is more, this monthly key reversal down has been repeated in most of the other oilseeds and veg oils. So please pay special attention to it, as it could decide whether the mid to late June action is either a halfway hesitation for possibly lower prices or a small double bottom. We will soon know, I suspect. Winnipeg Canola. There had been a number of patterns developed here, some with direct influence on the market, some not so much, but we ended up with just one pattern still showing the overall way forward. This longer term pattern I spoke about 18 weeks ago when I said, and I quote, "I've also drawn in the meantime a March to December 2025 bullish Andrews pitchfork." End of quote. This pitchfork, now highlighted in bright pink on my daily chart, has so far not had any tines. Even now, no tines have been tested bar the lower tine back at the start, and that held back then. Despite this, I still think this pattern is very important now and in the future. So please just keep it in mind and keep a watch on it. We are today in between the bright pink middle tine above, which is currently at 836.80, and the bright pink lower tine below, currently at 702 1/2. This has left us with two shorter term patterns. The first is a small lopsided mid-May to mid-June head and shoulders top, a dark blue neckline currently at 771 even, which also forms part of the head of a larger, more complex mid-April to date possible head and shoulders top for bright red neckline currently at 726.60. The smaller head and shoulders top saw a break below the neckline 2 weeks ago, giving us a primary target in the 733.20 zone, a zone the market's already reached, and a secondary harder to reach target X2 down in the 707 even zone. A not impossible task, but given the way the market reacted back in mid-April when we last saw a drop down lower to these sort of levels, one that may have its own challenges. The second larger head and shoulders top pattern is not fully formed as yet, but I can give an idea of possibilities should this happen in between my commentaries. Thus, we would have a primary potential of minus 38.1 or 38.10 cents under a confirmed break of the bright red neckline, and a secondary hard to reach potential of minus 74.70, so nearly 75 cents, under a confirmed breach of the bright red neckline. I will be very interested to see if these now come about. There is one other factor here to throw into the mix, and it is common with other oilseeds and veg oils, and one I warned about last week. See, June made a monthly key reversal down here, for all implications that may have, and what is more, this monthly key reversal down could decide whether the mid to late June action is either a halfway hesitation for possibly lower prices, or a small basing action, possibly even a small double bottom. We will, as in the other markets, soon know, I suspect. Bursa Malaysia crude palm oil. To start off with, please take no special significance in the colour of my notations on this daily chart. My charting system sometimes goes rogue and it decides it wishes to have other colours. In this case, bright red for my notes, but it does not signify anything special. Okay, so as I've done here for most of last year and now into 2026, I'd recognise the wide congestion area that was overhead, but which became a support. Then a big congestion, and now edging into becoming a support once more between 44.08 to 45.59. Prices which had since late March been up over it, but one failed attempt lower, mid-April, finally punched their way down through it 7 weeks ago, but could not sustain the move lower. With an original gapping action higher, changeover otherwise, which topped out for a second time 6 weeks ago, dropped down and 5 weeks ago gapped higher once again, only to come out once more and to top out once more, and in the process fill in some gaps, but still leave the big one from early March still open. However, the market has not done yet with these heartbeat moments of going up and down and up and down and up and down. As early 2 weeks ago, prices bounced up from the mauve medium moving average, currently at 44.50, pushed higher last week up through the bright green upper bear channel line, which is currently at 46.34, of a bright green April to date shallow bear channel, and that's 42.98 to 46.34. However, even this piercing higher could not be sustained, with no closes over the bright red upper bear channel line. Though I have to say, since mid-May we have seen rising lows, which is usually a sign of a bullish incentive, even if the top side has been limited. This all came down to the same question here that I've been asking for the past 7 weeks, and I quote, "The question here is the same as elsewhere in the veg oils and oilseeds. The cap higher and significant supports below. Is this market forming a topping action, or is it some form of a bullish halfway hesitation?" End of quote. I continued and I quote, "Here it is not so obvious, indeed is not obvious if we are forming either a topping action or a bullish halfway hesitation." End of quote. All this has left us with is the 44.08 to 45.59 congestion, and a pattern I drew 5 weeks ago over mid-April 26 to date, very shallow bright green, quite shallow bear channel. Right now we are towards the middle of this bright green shallow bear channel, and with the recent peaks we have seemingly legitimized this pattern. I would only add something I spoke about 3 weeks ago when I said, and I quote, "So this is the current pattern here that is driving this market, and I would watch this one very carefully for the next direction. However, just be aware of the possibility of false breaks, which given what we have created could be quite high." End of quote. This is still my view today. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.